Hey, it's Nick here, and you're in the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Okay, so it's definitely time for an update on the situation that we currently have on Euro USD. Now, I had spoken about Euro USD a few days ago. Now, the market provided exactly the move that we wanted to see from our previous analysis on the pair. So it's definitely time to make an update and see where we can be looking for the next opportunity on it. Now, as usual, I will be keeping the analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from a commitment of traders perspective. And obviously, if we're able to track how the big players in the market are moving their positions, we do have an advantage over our competition in the market. And by the end of the video, we will know exactly where are the better and the best probabilities for Euro USD for the next possible opportunity. So without further ado, let's get straight to the charts. Now, starting here from the monthly time frame, what we have is a market which has just provided a nice impulse to the upside, followed by this correction, and the market has already created the continuation to the upside. Now, this is the most common pattern in the market, is the natural movement of the market: impulse, correction, and impulse. Now, after the creation of a higher high, by definition, in order to create a higher high, the market must break above a high. Now, a high in the market is a level of resistance. And as you know, in the market, if resistance gets broken to the upside, at that point is turned support. So this is exactly what we can see here on the chart. We can see the previous high, which was acting as resistance, that now is broken to the upside. And now this previous resistance is now turned support, and the market has already tested and started to reject the zone to the upside. So on the monthly, previous resistance turns support that the market has just tested and started to reject to the upside. Now, generally speaking, after an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has just retraced exactly to the 50% of the Fibonacci taken on the impulse leg itself, which is a very strong support zone. And in this specific case, we can see how the 50% was lining up perfectly with the previous resistance turn support, creating a confluence of support exactly inside of here given by the previous resistance turn support with the 50% of the Fibonacci taken on the impulse leg. And in fact, this is exactly the level that the market has just tested, and it is currently rejecting to the upside exactly as we wanted to see. Going down on the weekly time frame, what do we have? Now, here in the weekly, we had spoken about Euro USD after the market had broken this structure. In fact, this level was acting as very strong resistance here. The market broke that zone to the upside. At that point, it was acting as support. The market then broke back below, and at that point, the zone started acting again as resistance. As we can see here, the market also created this candle here, which is the candle which the next one, most of the times, does fill in the wick. And in fact, that is exactly what the market did, and the market created a continuation to the downside. Now, when you see a candle like this, with a red body and a wick which is as long as the body, sometimes even more, what you expect after a candle like this is for the next candle to fill in the wick. The reason behind this is very simple. What you will have if on the weekly you have a candle like this, on the daily time frame, so on the lower time frames, what you will actually have is an impulse and correction, in which the correction is exactly this wick. And after an impulse and correction, what you expect is for the market to provide the continuation to the downside, possibly for the creation of a lower low. And in fact, we can see that that is exactly what the market did. The market continued with a nice move to the downside, filling in this wick. And currently, the market is rejecting the monthly support, as we have already identified. Going down on the daily time frame, what do we have? Now, at the moment on the daily, we have a market which, as we already know, is creating a strong rejection to the upside, which is a retracement from this impulse that the market had provided. Now, first of all, I had spoken about Euro USD quite a few times In the past, I spoke about EUR/USD after the creation of this overextended W formation. When the market was here, I made a full breakdown explaining all the reasons for which we wanted to see the market create this move to the downside, and in fact, that is exactly what the market did. Then we had the creation of this W formation, and when the market was here, I made a full breakdown explaining all the reasons for which from here we expected the market to provide this move to the downside, and again, that is exactly what the market did. Then we had the creation of this M pattern, and when the market was here, I made a full breakdown explaining all the reasons for which from here we expected the market to provide this move to the upside, and again, that is exactly what the market did. Then we had the creation of this impulse and correction. And what did I say? I said from here we expect the market to create a move to the downside, possibly to provide a lower low. Specifically, I spoke about EUR/USD after this M pattern, explaining why we wanted to see first this correction and then the continuation to the downside. And from here, I made another breakdown explaining all the reasons for which we wanted to see the market create this move to the upside. And by the way, I will link in description all this previous analysis. You find all this previous analysis linked in description, so you can go and check it out for further reference and obviously more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now, at the moment, as we were saying, we have a nice impulse to the downside and correction. Now, generally speaking, if we want to measure a correction, what we have to do is take our Fibonacci from the high to the low of the impulse. And we can see that at the moment we're testing exactly the 0.786 of the Fibonacci taken on the impulse, which is a strong resistance area. But in this case, it is a confluence of resistance area because it is lining up perfectly with the previous support, now turn resistance here from a daily perspective, from which we can expect the market to provide a rejection to the downside. However, there is a problem. As we have already seen on the monthly, we have support and we do expect the market to continue higher. So how we will be approaching this situation, a situation in which on the monthly and weekly, everything looks quite bullish and we can expect continuation to the upside. However, on the daily, we have resistance. How do we approach a situation like this? Now, before I show you that, let's first go and see what we have from a COT perspective on the euro, specifically EUR/USD, because always remember, all currencies on the spot are traded against the USD. So if you're checking the data for the euro, what you're actually checking is EUR/USD because all currencies on the spot are traded against the USD. Now, what we can see here with the last reports is that we went from having 165.3k net positions to 137k net positions, with 21.2k longs closed with the last report and 7.1k shorts getting opened. So on the euro, we're starting to get quite weak. We don't see the strength. Even though we just had this move to the upside, we still don't have the new report after this move. So we don't know if hedge funds actually now added proper longs or not. The only thing that we know is that in the long term, we did go from 133k to 165k before decreasing here. So we don't really have a clear picture of what actually happened with this move to the upside. We can guess that probably longs got opened and shorts got closed, but until we will clearly see this reflected in a couple of days with the new report, we don't have any kind of confirmations in that regard. The last report that we have is longs getting closed and shorts getting opened, and the market clearly creating the move to the downside that we wanted to see. So at the moment, we still don't have any kind of clear direction for the next move of EUR/USD. So what we will be doing with students is, as usual, being reactive and not predictive. If the market from here will just reject its zone to the downside, at the moment, we're not interested in the move to the downside. If the market from here will break above this structure, in that case, that will be very interesting. Because if the market from here will actually break above this high, as we just said, if the move to the downside happens, at the moment, we're not interested in it. If the market, however, will complete this impulse by breaking above this resistance, as you know, in the market, previous resistance, once it is broken to the upside, is turned support. So after the break above this structure, on the retest of this previous resistance, now turn support, at that point, the monthly, weekly, and daily timeframes will all be showing the same direction. And if the market will also manage to break this high, we have very high probabilities that hedge funds are adding longs on EUR/USD, and we will see that also reflected with the new report. So only if the market will break above this high after a break on the retest exactly inside of this area, This is where we will be monitoring price action from a 4-hour perspective with students. Now, why 4 hours? Because monthly, weekly, and daily combined with the COT data are the best time frames for the direction of the market. But when it comes to confirmations and entries, the best time frame is the 4 hours and lower. So anyway, the intraday timeframes. So with students, instead of this area, we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and for the market to actually complete this impulse correction and impulse pattern to the upside and create a higher high. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.